Hello everyone, welcome to the ichimokujcharts.com daily analysis for the Aussie dollar US dollar FX for Monday, May the 7th, 2012. Well, a continuation of the trend to the downside today, a candle with a lower high and a lower low, continuing this very strong trend that we've had in this first time frame for the past week or so. A change of momentum today, however. Previously we saw the buyers in control of this market and being very strongly committed, making very solid net bearish progress for each day's trading. Today we have a white body candle, and that is significant for this market. It does set the market up for a potential change of trend in the first time frame back to the upside. The white body now denotes the buyers making net bullish progress on the day between the open and the close, as opposed to the sellers who are making bearish progress, so a change in momentum. The buyers, however, weren't strong enough to change the trend, so that could be fairly important for this market, and we would require confirmation of the change of trend, with the market taking out the high of the current candle and making a higher high and a higher low. And we've seen today, as this market is developing, that it has tested up towards the high and it's been rejected from there. So this 102.18 level is very, very important for this market moving forward. The white body, however, has seen the market close up towards the high as well. So we've seen the buyers actually take control of this market, as well as showing some commitment, and we saw the sellers lose commitment down below the 101.44 support level that's been highlighted previously. In terms of the pattern that I've described previously, this flag pattern, we had the very solid breakout down below that pattern, previous downtrend, the flag that's formed, the breakout below the lower boundary, and a very bearish breakout, and there is a very strong likelihood that the market will eventually go on with this move to the downside following this breakout. There is a possibility that the market could retrace. Quite often markets break out from the congestion patterns, then retrace back towards the boundary, and then we see the sell-off continue. So there is a possibility that we could trade all the way up roughly to around this 102.75 region, or even perhaps to the Kijun-sen and Tenkan-sen that are trading at 102.91. At the moment, however, this 102.18 level is acting as solid resistance as the market's developing today, as I've mentioned already. In terms of the Fibonacci extension that I spoke about last week, we had the market testing to around the 100% level, and we did have some rejection from that level, but we didn't end up with a change of trend. The market continued trending down. At the moment, we've had the market test below the 161.8% of this move here, and we are getting some rejection, but the market has tested lower. The trend is still down. There is still a possibility that we could trend down to the 261.8% level at 100.22, which is basically the round number $1. So that is something to look out for. And then looking at the Fibonacci retracement of the previous swing here, this swing to the upside of the first time frame uptrend, the market created this first time frame downtrend, and we are examining the extent of this current swing in relation to the prior swing, and it now has become not a retracement but an extension of that swing. And the market did find initially support at the 61.8% level, then at the 78.6%, but the trend didn't change, so that retracement and extension is still in force. We did see some rejection from the 100% level, but the trend has gone on, and we're now seeing rejection from the 161.8% level. So there is a possibility that we will see that change of trend based on the rejection from 161.8% level. Now, in terms of Ichimoku, the market is bearish in all three time frames. Obviously, when we've had such a strong down move over the last week or so, with the sellers in control and this market trending down very strongly, the market is trading below the cloud. So we have a bearish bias in the long-term time frame, but also bearish in the medium-term and fast-term time frame by trading below the Kijun-sen and the Tenkan-sen, which are in the same area at 102.91. With this breakout below the congestion area occurring below the cloud, it does add probably more weight to the possibility of the market going on with this move to lower levels, and the target for the breakout from this pattern was below the $1 level, from memory down around this 98.59 level roughly. So there is still a possibility that that move will continue. As I've said, we could get some sort of retracement back up towards the Kijun-sen and Tenkan-sen, or the boundary of the pattern, and then another sell-off. So we do need to be aware of that. But at the moment the trend hasn't changed to the upside, so that's quite important. And as I've mentioned previously, the Kijun-sen is actually pointing flat, so we do need to be aware that there is a good possibility of the market extending back up towards the equilibrium as referenced by the Kijun-sen. So be on the alert for a breakout above the 102.18. The 102.18 level will be very important, as I've mentioned, for tomorrow's trading, but then certainly the 101.44 level and down to the low around the 101 level.